Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 12th of March. We're hanging out on a Tuesday. Little bit of carryover from yesterday's buying, certainly nowhere near the excitement, at least across the board in the market today. A little bit more of the same, not much either way, just a little continuation overall. And good afternoon to you, Marie. Great to see you. Good afternoon, everybody. I hope everyone had a great day both in and out of the market as we're already approaching the halfway point of the week. Goodness gracious. So you did see some pretty good movement in the tech sector as we actually pushed 7,200 on the NASDAQ. We saw, the staple sector kiss resistance and sell off, energy getting back into the right side of the 65 marker. So definitely an interesting day in the market. Maybe not as interesting as yesterday, though. An earnings front really light going into tomorrow. Not really any big name companies. We will have a few later in the week, of course, but going into tomorrow's open, we are pretty light on the earnings front. Good afternoon, Patricia. Hi, Thiago. Good to see you guys. On the S&P, not quite as much strength on the intraday today. If we look at the 15-minute chart, yesterday we had our gap and just kind of ran, right? Today we had our gap and kind of ran and then kind of flatlined. So a little bit more of a flat type of a close on the intraday chart, at least. On the S&P 500, it didn't break the day's low or anything along those lines, but we didn't keep that top to bottom momentum yesterday, and that's easier said than done, right? That's no easy task by any stretch of the imagination. If we look at it on an hourly time frame, we still have some room to go. We're kind of knocking on the door of that 28. We've seen it play before, while kind of the resistance is probably more accurately described as around 2820. I think now we can say that 2800 still is at least something that we have worked with in the past. It definitely is a big round number, so something that we want to keep our eyes on. I would suspect that if we can push through the 28, shouldn't be a big deal to knock once again on the door of 2820. Of course, that's a pretty big level of resistance. We'll definitely want to treat it with the respect that a level of resistance deserves if and when we are able to challenge it once again. I would expect that this time should be a little bit easier, in theory at least, to break through. Nice pullback, maybe a little bit of momentum, but you never want to assume something is going to break resistance just because you want it to, right? So we'll continue to monitor that same number. Beyond that, if we can break that, that's a very bullish signal as far as I'm concerned. The NASDAQ hilariously closed at 7201. So we did break and close above 72 by the bare minimum, but a close is a close, right? Good afternoon, Whitney. Good to see you, my friend. I don't think we want to call it a breakout just yet. Definitely think we're knocking on the door. There's no, I don't really think that's too much up for debate. I don't think it's a clean close above that. I do like that we were able to close above 72. I think that's a, kind of a mental victory, but I don't think it's quite a technical one. For me, at least, I still really like tech and I still really like a breakout, but I want to see it. Let's see it carry that over. Let's see it clearly be on the top. I don't want to be able to debate it. I don't want to debate is or isn't this. And I think right now we honestly could. I think aggressively we could say, yeah, it did. And, more conservatively, where I tend to find myself, I'm not quite sold just yet. But love the action, definitely strong. And we're challenging resistance. We'll see who wins. But definitely we got to get there to challenge it. So that's our first index to be challenging resistance here. The Dow, on the other hand, maybe the last one to challenge resistance if that's the way it wants to go. Really drugged down by Boeing, who, yesterday Boeing had that nice rally off of the open. Today, quite a bit of selling over in Boeing, big component of the Dow Jones. And it looks the part. It does look the part. So I love it. I love it, Whitney. So it's my least favorite index right now, and I don't say that from a bearish point of view, but I definitely I definitely, no questions asked, like a break on the NASDAQ better than the Dow Jones personally. And I like the S&P a little bit better too. Not really in bearish signals or anything like that, but unlike the other indexes, specifically the NASDAQ and the S&P, we're still below those moving averages. We closed in the red today. Everything else pretty much closing in the green, holding support, not really doing anything wrong so much as just that Boeing thing. Boeing's kind of a big deal, right? I don't really love where the Dow is right now, at least in relation to the other indexes. If you look at these indexes on hourly time frames, the Dow is the only one that looks suspect. Here's the Dow on the hourly time frame, whereas if we look at the S&P, it's above everything. If we look moving average wise, I should say, if we look at the NASDAQ, showing a lot of momentum above all of those moving averages. Even the RUT was able to close above the last one in its way, the 50 here today by a hair. And this is, of course, the 50 hourly, but all of these other indexes are, showing above those averages. And then you have the Dow Jones that's just kind of not. And so that's definitely something. Yeah, Boeing's a big deal. It doesn't necessarily have to be running, I don't think, for the Dow Jones to run, but it's hard to carry it if it's going the other way because of the nature of it. And that's still a very unsettled situation, I think, from a trading perspective. We'll see where this one takes us. Want to keep an eye on these averages, in the short term on these daily time frames. Breaking back above them would probably make me feel a lot better about the Dow Jones, especially compared to the other indexes. Just something to be keeping an eye on. A little bit more of a bearish signal. And again, sell signal, I wouldn't argue that. But bearish signal, I think you could make a little more of a bearish argument personally on the Dow than the other indexes. Similarly, on the Russell, but we were able to close above that short-term 9 EMA today. We're still below the 20, but as you saw on that hourly chart, we were able to kind of break through the 50, and so kind of we're above all of those hourly moving averages, at least for the time being. Still some room to go. Again, much like the Dow Jones, get back on the right side of that 20-day moving average. I'll feel a lot better about you. I'm not quite ready to say you should be bearish on two indexes and bullish on the other two right now. But I definitely think, to me, the NASDAQ and the S&P are definitely showing more strength than the Russell. And then I would kind of lastly put the Dow, at least for the time being. We had several areas test resistance today, at least on our ETF level, kind of giving us a reminder that resistance hasn't gone anywhere, right? The only thing we know for sure is, a week and a half ago, we were knocking on the door. We lost all week last week, right? Material sector, one of those areas, running right back up to resistance, definitely selling off of that at that point in time. Very much so. I mean, not anything necessarily bearish, but we work into that resistance level and it immediately kind of turned around. So folks are still going to be watching resistance, and rightfully so. If we can take that out, as I've said many times before, and I still will believe this, I really like the room that this area still has to offer past this 56 level of resistance, this 200-day moving average that are pretty much the same place at this point in time, and not a lot of resistance until we get into the mid 57s beyond that. So I still look to this an area that I am looking at from a bullish breakout point of view. I still do like it, and probably will as long as we stay above those lows that we put in last week. Yesterday we talked a lot about the upward movement we saw off those Friday lows. Not everybody was probably ready to call that new low from Friday support. I think this second day creating these higher highs and higher lows probably going to sell a lot more people. So overall, and I think we can apply this pretty much across the board, at least in most areas, a little harder in maybe the REITs and the utilities who are just kind of screaming up the charts. But these swing lows that we put on Friday, I really personally feel really comfortable saying that we stay bullish above those. That breaks, then all of a sudden, I think bearish arguments become very strong, especially if you kind of think about what that would likely look like. We tested resistance again, and then we got knocked back down, broke support, a little bit of a top out pattern. I'm not expecting that, but I do think it's worth keeping our eyes on in the event that that's the way we decide to develop here in the probably not necessarily this week, but maybe next. Hopefully we get a break. That's what I would like to see. Over in energy, we did close back above $65. I could understand the case from a bullish perspective, now that we're back above that price range, to be open to this area, from a large, from a big picture perspective. But I still maintain that the signal above 67 is such a better signal, in my opinion, that I don't think trying to mess around in this middle is all that worthwhile. Of course, you may agree with me, and I very well may be wrong, but for me, not really much has changed. Now that we're back above 65, I feel a little bit better about it trying to take out that 67. It's going to need to do that. A very mixed area overall from a technical point of view. You have things in energy, knocking on the door. Potential breakout could happen as early as tomorrow on ExxonMobil. You really could make the same type of a case for Chevron. But on the other side of it, you could make a case that CVX here, or I'm sorry, COP here is potentially breaking down as early as tomorrow. You have EOG, who broke down last week and are kind of basing over the last couple of trading days. You have Oxy that's kind of turning into a K trade for me, where one way or another break resistance up here in that 67.50 or break support down here around 62. Either way, I'm good with. So as you can see, and you may not agree with me, but there's a lot of mixed looking charts in this area. So that is one of the main reasons why, at least from a bullish point of view, I want to see that break. I don't want to mess around with some of, at least what I perceive to be a little bit of weakness in some of the big names within that sector. So definitely interesting. Usually see the energy sector looking a lot more identical, maybe too strong of a word, but energy stocks, of course, do tend to move together. Our financials were probably the most boringly interesting area. I have to move our line just to see this candle. So we worked right back in to that 20-day moving average and weren't really able to go up off of it. But if you look at it on a 15-minute time frame, I mean, we had our open and then nothing. So this was a really, really, really dull day overall in the financials. And I get it, again, much like the energy sector, there's resistance in a lot of those things. Now, I don't think as a whole, maybe the sector looks as potentially it could tip to the bearish side quickly as maybe the energy sector could, but you are seeing really, really similar, type of charts in the financial sector. You've got, things like Bank of America that could be a great breakout trade in the future. But it also, much like Oxy, has kind of established a very clear level of support, right? So we have some overhead resistance. You're seeing the same thing on Goldman Sachs. And so you're seeing a little bit, you have CME that's, just hanging out after breaking its support level, breaking its 200-day moving average. To me, that's a pretty darn bearish looking chart. So again, as we kind of talked about the last few times we've been together, this area is also one of those, let's get through the resistance before I get too excited. And that really hasn't changed. Much like energy, it can work into this trading range, and I will view that as a bullish signal, but I'm not really thinking it's a great tradable signal. I think the breakout would be a far superior signal within the financial and the energy sectors personally. And that's probably, I'm going to probably sound like a broken record all week long saying that. So I'll apologize in advance. Industrials, this is just going to be influenced by Boeing, as long as Boeing is going to be doing this seesaw, however long that takes. This is, of course, Boeing's a big part of the ETF, but it really kind of trickled down into some of the other stocks within the sector here today. I don't think there's anything to be overly concerned about at this point in time from a technical point of view. Yeah, I do think, for me at least, shying away from Boeing is that's exactly how I think you should handle Boeing. That's how I'll plan on doing it. I'm not going to try to mess around with all of the news that could potentially move it one way or the other, kind of at the drop of a dime. But when we look at the technicals of the industrial sector as a whole, I don't really think there's anything here to be overly concerned about. We are below, those shorter term moving averages because we did have a deeper pullback all the way to 74. And I could understand the argument of maybe wanting to shy away, but the other side of it, that's kind of why we got some really good pullbacks within the sector. So probably will, can probably make an argument either way, really, as long as our support level from yesterday holds. And that's right about that, in that same general ballpark of all this old resistance, the 200-day moving average. I think overall, you look at this from a bullish point of view. If we give out there and Boeing does start to put more and more pressure on the, components of this ETF and the industrial sector as a whole, could be something that maybe all of a sudden becomes bearish. Maybe we're a ways away from that probably happening if that's the way it goes. And as long as we're holding this support, I'm not going to be thinking too terribly much about that. But I think the support level is becoming pretty darn important at this point in time, just down here. And again, it's going to put us right around, $73 approximately, the 200, all of these old highs. So we'll watch that one develop. Certainly not a great day today, one of our few areas to actually close in the red. But again, Boeing is a big deal to everything that it's in. And so makes a little bit of sense that they're kind of having an impact. Negative, they had a great, impact positive right before all of this stuff, before the unfortunate plane crash happened. So here's our technology sector, knocking right on that door of that 72 here today, just like the NASDAQ. Very strong day, for tech as a whole, in my opinion, at least. Not a huge percentage day, but many of these nice, big tech companies were going up. Cisco hit a new 52-week high today. So continues to be, in my opinion, a very strong and appealing bullish sector. And I'll feel a lot stronger about that when we take out resistance at 72 on both the NASDAQ and the ETF. Could happen as early as tomorrow. Maybe we're going to lose, right? Maybe we won't break resistance. Maybe we need a consolidation or a little bit of a pullback, but at a very important price point, in my opinion, much like the NASDAQ overall in the tech sector. I really do like this area. If we can break, you guys know that that's definitely one of the areas that I really like on the breakout side of things. Over in Staples, ran right into resistance today and ran right back down, creating a nice little doji. A lot of indecision here. It's not just me. It's not just any of you who are feeling kind of the same way that many of us have been about this sector. We just don't trust it. We're not really against it, but nobody is doesn't seem like anybody's willing to believe at this point in time. What that means to me, same as yesterday. Break out of that resistance. You can make me a believer. Until that happens, I'm just going to be on the fence. So being my usual, nope, not today self. Support, of course, down here. I think you could make an argument either way. A break above resistance as a bullish signal, and I do think that's a pretty good signal if we are able to do that. A break below support, I think you could make a compelling case to the bearish side as well. So it is kind of developing within this trading range to potential entry until that happens. Yeah, I would agree. If I had to make a trade on it, Maria, I would probably go with the bull put as well until we break support, of course, at which point in time I'd quickly be changing my answer. But I would agree. We haven't done really anything wrong yet, and I think that's the important thing. We're struggling at resistance, and I think we can all see that we've been struggling at resistance, but we really haven't broken trend or anything along those lines. I'll always go with the trend if I have to make a choice. So yeah, I would agree with your analysis there, Marie, if I had to. Now, I'm more of the school of thought of generally leave it alone, but I wouldn't argue against the bull put argument. I'd argue against setting the trade up today at resistance, but I think that's a little bit of a different argument altogether. So another day in this same trading range in the Staples sector. One of these days we're going to break, and it very well may be to the upside, and for all I know, it may be tomorrow, right? But until we do, I'm just going to keep you on the timeout chair as I have been. Another great day in utilities. I think by my count, I think 17 S&P 500 utility stocks hit a new 52-week high today. It was another great day, after kind of, breaking and hanging around early last week. We're really just getting a really nice run. Of course, on this ETF, this is an all-time high. With most of those utility stocks that hit new 52-week highs, we're also hitting new all-time highs. Maybe not all, but the vast majority of them. It just continues to be an absolutely rock star of a sector. There is no doubt about it. It looks extended, but that doesn't mean it has to pull back, right? So from a pullback perspective, if we get it a pullback back into that 57 area to test the breakout point would be a really nice looking, potentially a nice looking entry point. We'll have to see if we get that one. Not going to hold my breath. As we all know, when some of these things get a head of steam, they can keep that head of steam for a while, right? But a very nice day over in the utility sector, as we basically have come to know in the utility sector. Over in healthcare, running right back into that old support level. Very clear when you look at it on an hourly chart. back right into that old range. This is a decision point from a price perspective, in my opinion. Either we get knocked back down, looks kind of like a kiss goodbye type of a pattern, at least on the hourly chart, or we push through, giving the bulls a little bit more reason to believe, well, hey, we took out resistance. There's really not a lot of resistance until we get into that 93 to 93.50 range. Overall, for me, this continues to be the type of sector that you are 100% a stock picker. You are open to bulls. You are open to bears. You are not going, into the overall ETF. And I'm not saying you. When I say you, I actually mean me. But for me, I continue to look at this sector maybe more than any other right now as, stay away from the ETF. Focus on the components, both bullish and bearish. Some really good trade setups. ABT was probably my favorite. Another okay day for them as well. Merck doing all right, but you have plenty of things that are running into falling moving averages that have been struggling or testing longer term levels of support, like an Amgen. So again, this is definitely healthcare. This is definitely one either way. Amgen hanging around a major support level right now. But you have Merck, just another good day over in Merck, coming off of those lows. We looked at UNH yesterday, testing support. You look at a Pfizer and you don't really know exactly what to think. Do you trust the 200-day moving average or not? You're below all the other averages. So very messy overall. I think you want to be careful still with, I always think you want to be careful across the board. You guys know me to be a giant coward, and that's okay. But I really think we want to be extra careful with the healthcare sector right now. But great opportunities on both sides. With all of that said, I just still think the ETF is a scary instrument right now, with kind of all the divergence we're seeing on the companies within that area. Over in discretionary, working right back into that 110 range. Much like the NASDAQ, I don't know that I would call this a break. You could make an argument. You would just be more aggressive than me if you did make that argument, is all. I still maintain that much like financials, and even more so, this is, an area that I really like from a breakout perspective of 112. As all of you guys know, still don't really love it within this trading range. I will be patient, at least broadly speaking, for that 110, that 112 break. But I could make, I can understand the case, just like energy, now that we're back above that old, support that we did break, that should act as a resistance zone. There's not a lot in the way until we work to 112. I wouldn't really fight against that because overall I would agree. I just don't think it's an ideal trading condition, at least directionally speaking. Not a lot of room to work with in there. So continue to watch 112. Again, much like the rest of the market, I absolutely believe we can use Friday's low down here as our swing low if that breaks, and it probably wouldn't be doing it all by itself if that's the way that this thing goes, but that's going to be, potential sell signal. So in addition to the nice day that we had for any bullish positions yesterday, and a pretty decent, nothing spectacular, but okay follow through here today. Beyond that, I think what really matters is that we can now call that Friday low support. At least that's what matters to me. That thing shouldn't break, and that is kind of in so many of these different ETFs and so many stocks that we're looking at as well. Not to be outdone by the utility sector, the real estate sector says, I'm hot too. Don't forget about me. I went sideways a little longer than you, but I'm still here. Another great day. Think about a half dozen REITs hit new 52-week highs. Continues just to be a great area. It's hard to really say anything too exciting or new about the real estate sector because really, we've been saying it for months, right? The only really thing that we've said, we had a little while when we went a little bit back and forth volatile, right? That was about as exciting as it's been for a while, never really generating any sell signals, just a little bit more day-to-day volatility than we had been accustomed to here a couple weeks ago. Another all-time high on the ETF, lots of these stocks within this sector hitting new highs. So again, much like utilities, it's how do you look at it through anything other than bullish eyes? Not specifically, hey, I'm going to buy it tomorrow. Maybe I want to pull back, or maybe I'm going to shy away from REITs as a trading instrument because they're not, all that volatile, generally speaking. But overall, just another great day for the real estate sector, no doubt about that. And lastly, over in the communication services, we did break and close above that $47 mark here today, I would definitely call that a bullish signal. A lot of it was probably on the strength of Google. As of course we all know, big player, and now Google is testing, that 1200 mark. So both old resistance and psychological number. You didn't have Facebook. Facebook tried again today and is hanging in there, broke on the intraday, but much like yesterday and much like a few days ago, broke on the intraday, not able to hold it throughout the course of the day. If this break on XLC wants to run, it's probably going to need Facebook to try to break that resistance, or Google to break resistance, or both. Both of them are at some resistance levels. You're seeing Verizon kind of knocking on the door of some resistance. Took out some here yesterday, but we're challenging another level. You've got a Disney hanging out right below resistance. So even though the ETF, that is a clean break, and I will definitely respect it as such, a lot of these components haven't quite broke out yet. Now, if we can run on that on the ETF, that means at least some of these components did, which would probably be a pretty good signal within this area. So I don't think I'm quite ready to be excited about the break on the communication services just yet, simply because some of the key components are about to challenge resistance or haven't broken out just yet, but they're all right there in that range where could happen as soon as tomorrow if it wanted to, right? So, overall, not a lot changed from yesterday from a technical point of view. We did see some resistance being tested in a few of our areas. We did see it win, at least broadly speaking, pretty much across the board here today. So we want to keep an eye on that as we're moving forward. For the most part, though, just a little bit more of the same as looks like the market's going to try to take out resistance. Whether it wins or not, only time will tell, right? But it looks like it's going to try. Of course, after, quite a bit of movement the last couple of days, a little bit more of a boring day here today. So the VIX down a little bit, just as probably to be expected. Over in the dollar, little bit of back and forth, going on right at that old $97 mark. Big doji, but a lot of back and forth. Don't think it's a signal just yet. A little bit of upward movement tomorrow. I think you could make the case that this is a pullback opportunity. I would probably make the same case myself. I just wouldn't make the case that it's overall a tradable pullback opportunity. The breakout is the thing I continue to be watching for and will continue to be watching for. But we definitely starting to maybe build some support. At the very least, I think we need one more candle for confirmation in looking at this chart. We still, technically made lower highs and lower lows here today, but we did see a little bit of indecision holding up above that 9 EMA, which is, hey, if we can do that, there's probably at least a little bit of strength. Whatever we do or don't do, I think keeping an eye on that 97.60 or so resistance level is probably where most of our eyes are going to be drawn if we are able to work back into that trading range. In the metals, over in gold, we were able to do a couple of good things here today. One, we were able to close above the 9 EMA. And as I said many times, it's just a thing, but it's more bullish to close above it than to close below it. Did I say that right? Above it is more bullish than below it. Let me try that again. And we were able to close above that here today. Also able to close above 1300 here today, which if nothing else, maybe a bit of a psychological win. Now, I really think if I'm thinking about buying this, I'm getting back above the 50-day moving average here. It's not that far away and it could be resistance. I would feel a lot better being a bull if it were to break back above that. Support I still think is in our 1280 range, and I think that's probably not going to change, at least for the short term. One really cool thing, if you look at the gold on, say, a 4-hour chart, definitely showing a nice sign of reversal, right? We had that big sell-off. We just fell right through 13 like it didn't even matter. We flattened out, big rally up, nice pullback, creating a higher low, and now we haven't made that higher high yet. We're knocking on that door. So it looks like there's a little bit of momentum if we kind of break it down into a little bit of a shorter time frame. I still think in my mind, above the 50 is where it needs to be. If I'm thinking about it from a buying perspective, that really won't change. But this is kind of a step I think you have to give this one not just dollar for dollar to the bulls. Of course, it's a green candle. You have to give it dollar for dollar to the bulls today. But I think we're seeing a few interesting things. Not there yet, but maybe having a different conversation as early as tomorrow. If we can break that resistance, if we can break that 50, I could understand the bullish argument from a shorter term, not short term, but shorter term perspective. Because let's not forget how strong the weekly chart looks from a potential pullback. Yeah, that was a big candle. It would have looked a lot better if this happened in 2 or 3 candles instead of 1.5, right? But a pullback is a pullback. Nice hammer candle last week. Already, again, only 2 days into it, but so far we've taken out last week's high. We're of course creating a higher low than last week's candle. So I'm not there yet, but I could see a scenario where I could be in the days to come. Above that 50, though, for me, below that 50, I would just be worried that it's going to be resistance, and I'm always probably going to be that way. Good day in silver too, but I don't think you can. I mean, you can make any argument you want, but I think the argument on gold from a potential buying perspective is a lot stronger than the argument on silver. Although if we do break back above this old floor that we did kind of run into it here today, and that was kind of the top of the day for us, we have closed above that 9 for a couple of days now. It's starting to turn around, stop going down, and starting ever so subtly to start pushing back up. If we can get back above this range, I would understand that, and I would call that a bullish signal. I wouldn't feel comfortable because then I'm going to be worried about the falling 20, and probably more importantly, that 50-day moving average as resistance. There's just lots. And you guys know me. Some of you guys know me very well. For me, it's still the break above 16. Let it happen. I'll let it happen if that's where it wants to go. But 15 is our support level. I think we can comfortably say that. We had a pretty good idea that was where we should be looking when we were selling, just based off of all the history and the nice easy round number mark to boot. We clearly are fighting resistance at 1550. There's going to be lots of little stuff, whether it's the falling 20, the flat 50, the old support here at 1575. There is going to be a lot of little stuff in the way if and when we break back above this 1550. And that's why I'm probably not going to like it very much, even if it does break that. But I would definitely call that a bullish signal. If we start to see some selling over the next couple of days, I think you could make a strong case, though, that that's a bearish opportunity where basically a double top kiss goodbye type of a pattern. So this is a pretty important fight here at 1550. And I don't think we can say one way or the other who should win at this point in time. Definitely a good day here today. Couple good things going for it, but a couple of scary things above it. No one wants to buy at resistance, right? So this one's going to be fun to follow. But for me, really, probably anything above 16, this resistance level just north of 16 is where I'm thinking buy, and anything below 15 is probably where I'm thinking sell. But we'll see how it develops. If we get some slowly developing sell signals at this resistance, I could be tempted to go bearish, but we'll have to see. They're going to have to happen first, right? Over in natural gas, it caught our footing here today after quite a bit of selling here yesterday. Not really much has changed from a technical point of view. I still really do like the break of resistance of the 50 as a short-term buy signal. Personally, we are still holding above that 20 simple moving average. More importantly, or as importantly, holding above that old breakout range. Below here, I would call it a sell signal. I just don't think it's a very easy to trade one. As we've talked before, we've got a ton of history at 250 and recent price history at around 260. So there's not a lot of room to the downside without challenging some fairly important, this is important. 250 is, in my opinion, a very important level of support. So to the downside, I could get it if we broke support, but I would not be interested. That is just way too tight. You can see on this weekly chart that 250 range is just a very strong level of support, or at least it has been historically. So I don't think that's the signal that that you're hoping for if you're interested in trading natural gas one way or another. I think the break to the upside is a little easier of a trade. Now, short term, if we break this on, say, an intraday time frame, maybe things are a little bit different. But we are continuing to trade within this range, and we all know, at least you all know how I think about these trading ranges. Sooner or later, we're going to come out, and whichever side wins is a tradable signal. Whether you want to trade it or not, that's the real question. And I would maintain that if we do break the support, it is a bearish signal. I just don't think it would be a tradable one for me. Break above, I do think it would be a tradable signal personally. And lastly, certainly not least, our friends over in crude running right up to the top of that trading range today. And of course, as is just normal in the world of crude, came off of those highs. Very, very sideways, very, very undecided one way or another. I have no idea. Honestly, I have literally, if you said, you have to trade this, Frank, you can go do a bull put or a bear call on it, but you have to do something, I wouldn't want to do anything. I'd just flip a coin so I didn't have to assume the responsibility for being wrong, because I really think this is very indecisive at this point in time. If we're closer to resistance, I guess maybe I'd bet on that, bet on support. I guess, I don't know. Luckily, we never have to do anything, right? We know the numbers at 58 and 55. They have not changed for several weeks now. A break either way is a signal for us as traders, one way or the other, whatever we do or do not do. I do think we would all call a break either way a tradable signal. We're going to have to wait at least one more day to get that signal, and we will see where that one takes us. Of course, from a resistance and support point of view, if we do break to the downside, our support level is way down here in that 51 or 51 and a quarter range. We would probably have to contend with that rising 50-day moving average if we break to the downside, at least potentially as a support zone. On the other side of it, of course, we've got that old history at 59, which is the scary thing from a bullish point of view. If that doesn't scare you, we've not really got resistance until the 200-day moving average. So there is room really either way if and when it breaks out. And eventually it will. I can't imagine we're going to spend the rest of our lives talking about crude going between 55 and 58. But not today. Today we still are. I don't think so, Marie, because my expectations are, and right or wrong, when we do break out of whichever side, I wouldn't be surprised if we get a pretty good run that way. Well, I would be looking at, the 50 as support. I would be thinking about that more as short-term support, right or wrong. I would be saying, well, hey, we topped out, we broke support. I would expect more movement than would be comfortable for me. Really, same thing to the upside. 59 would scare me, but it wouldn't make me bearish. It would just scare me, so I think from an iron condor, I really want to be sold on that. And I would expect there's at least a decent chance of volatility once we break one way or another that would keep me away from it. I understand the logic on it. If maybe this was a boring stock, maybe it'd feel a little different. But on something like crude, crude can move, right? So maybe it won't. And who knows? I mean, we might be in this range another month and I'll say, yeah, hey, remember back in March, Marie, when you brought up an iron condor? Yeah, that was something I wanted to do. So we'll see where this one goes, but still very, very sideways and very undecided one way or the other right now. So ladies and gentlemen, that is going to do it for the market recap today. Not a lot has changed. We're challenging resistance. I mean, we do have the NASDAQ at resistance. That's kind of a big deal. We had a few of our areas test resistance and at least on today fail. But again, it's just today. Didn't really generate a lot of sell signals, just kind of wasn't going to happen here today. So obviously we're not out of the woods yet. It looks like the bulls still are in control, but we do have resistance in multiple areas that we are going to have to deal with. Not to say we can't win, not to say we won't win, but we have to earn it, right? It's a lot easier to go from support to resistance than through resistance, right? So we'll see where this one takes us going into tomorrow. But with that, get the heck out of here as always, you guys. It's my pleasure. I certainly appreciate everybody's time. It's a lot more fun to do this with you guys than on my own. So thanks for hanging out with me. For all our pro members, don't forget we got the coaches show this afternoon or evening, depending on where you live. And, if you aren't a pro member, head on over to Tackle Trading. Try us out. Take that 15-day free trial. See what we're all about. I think you'll enjoy being part of our team. If you enjoy the market recap, it's always helpful and appreciated if you do give it a thumbs up, and be sure to subscribe to the channel and hit that notification bell if you are new around here to keep up with all the stuff that we're always doing over on our YouTube channel. Join me over at Tackle Trading and at Frank Martin 23 on Twitter as well. Another fun way that we can stay in touch with one another throughout the course of the trading day. Wow, that's a lot to have to say at the end. So, all right, ladies and gentlemen, well, thank you so so much. It's always great to see each and every one of you. Thank you so much for your time this afternoon. You guys have a fantastic Tuesday night. I'll see you same time and channel here tomorrow. Thanks and goodbye, everybody.